there you have it, the closing bell at the New York Stock Exchange. The Dow Jones had a strong day, fueled by bank earnings. The industrials are up more than 740 points.
The S&P and NASDAQ also had big gains today. Both indexes jumped around 3%. Evan Halper joins us now. He is a business reporter for The Washington Post. Hi there, Evan. Thanks so much for being with us. So, it's interesting. We've been watching gas prices, of course. They have been slowly but steadily declining across the U.S. What do experts believe is causing that?
Well, the big thing is that the sanctions that were supposed to really tighten the supply have not been working as effectively as projected. And so a lot of Russian gas has been getting out to other places, getting to China. And so ultimately, the market just isn't as tight as initially feared when these sanctions began. Of course, that could change when the next round of sanctions kick in on December 5th, or actually change months before that as oil traders factor in the impact.
And so the Washington Post recently published an article in which you report that energy analysts believe gas prices could surge again this fall. Why would that happen?
So these sanctions that kick in on December 5th are expected in which, the EU is banning all cargo, imports of Russian oil. They're much stronger and much more punitive than the sanctions that exist right now. And so they're expected to actually double the amount of Russian oil that goes off the market, so much so that it'll really tighten supply and potentially have an impact on prices. There's some caveats there. I mean, if we sort of head into what looks like a prolonged recession, if the economy, really takes a turn further south, that could really just weaken demand. At which point, even these stricter sanctions may not lead to the kinds of price hikes that some are projecting. But the warning is that so much oil is coming off the market come December that we can see prices go up towards $6 or $7 a gallon in certain scenarios.
Wow. Well, the Biden administration has been releasing oil from the National Reserve and has implored gas companies to lower prices. So how do experts and politicians outside the administration feel about those approaches?
So the approaches have not really done much to stop the rising cost of gas. We are seeing gas prices go down, but it's not so much because of actions the administration's taken, but because of other factors I mentioned before. There's just really very little power that politicians have over the price of gas in the short term. And so some of the things that the Biden administration has done, releasing 1 million barrels per day from the Strategic Petroleum Reserve, they've had an impact, but it's been largely marginal. It's just not that much oil when you consider how much is on the world market at any given day. Another action being considered is cutting gas taxes. But cutting gas taxes, of course, that sends a signal to drivers that there's, prices are going down and they can buy more. But when supply is not going up and the price goes down, you just create more problems for yourself down the line and, add pressure on prices.
Yeah, that's the pressure on prices for sure. All right. Well, Evan Halper, business reporter with The Washington Post, thanks so much for joining us. We appreciate your insight.
Thanks for having me.